Good morning, everybody. This is your market update for Thursday, May 11th. I hope everybody is having a great week so far. Lots going on this week in the market, and most of it has actually been bond friendly and interest rate friendly. Mortgage-backed securities closed up 33 basis points yesterday. We're back up above that triple level of resistance that we have been talking about. That positive momentum carried over into today as well, opened up 13 basis points. Last I looked a few moments ago was up 16 basis points. And that is primarily due to a few things. A favorable CPI report that came out yesterday, which showed that inflation on a consumer level continues to cool. That report was pretty much in line with what the market was expecting, with the exception of a couple of components that were actually lower than what the market was anticipating. Then we had the PPI report come out today that measures inflation on a wholesale level. That came in lower than what the market was expecting, which again is bond friendly, which is interest rate friendly. Then we had initial jobless claims report come out today that showed that unemployment claims filed last week for the first time increased by 22,000, which is more, substantially more than what the market was anticipating. So all that basically together shows that the desired impact that the Fed wants from the Fed funds rate increases, that's happening. Now, granted, I don't think it's happening at the pace they would like, but nonetheless, things are headed in the right direction. Mortgage rates hate inflation. Anything that's deflationary, any news that comes out that's deflationary is going to benefit mortgage-backed securities and therefore benefit interest rates. Stock market not really having a great day, not liking the news quite as much. Opened down pretty much across the board. Last I looked a moment ago, the Dow was down 255. NASDAQ's actually up on the day 20. S&P 500 is down 9. I think much of the reason that the stock market is down today is a kind of a return to focus on some potential banking woes or woes in the banking sector. PacWest Bank came out today and mentioned that their deposits last week decreased by 10%. So when you take into account the fact that also their stock prices have reduced or dropped by 83% in the last 2 months, basically they're having a hard time raising capital at the same time their deposits are diminishing. So not a great place to be in from a banking perspective. And of course, with the banking failures as of late, over the course of the last 2 to 3 months, all eyes with any news like this will be back on the banking sector. So we'll continue to watch the market, see what happens. Next week is going to be filled with a lot of information as well, some more inflation information. And again, that could benefit interest rates and the mortgage-backed security market if the inflation report next week continues to reflect the same thing that we saw this week. So we'll continue to keep you updated. We'll update you tomorrow on what interest rates are doing week over week. We anticipate that they probably declined a little bit, but we'll wait and see what that report that comes out here in just a little bit today reflects. Hope you all have a great afternoon, and I will see you tomorrow.